Well, the STX Nifty is indicating that after yesterday's breakout, we'll have a 30-point downtick, which is not bad news actually. Yesterday was, of course, a breakout, so 128 point higher. Let's see how things move. Mitesh Thakkar and Prakash Gaba now join us. In a bit, of course, Ashwini Gujral will also join us. Gentlemen, good morning. Prakash, what's the call on the index now? Yesterday we had a breakout on the Nifty at least. How do you trade that and how do you trade Bank Nifty?
Good morning, Anuj. Well, yesterday we had a breakout and a beautiful breakout. It was a breakout with a gap. I would say that and this was the fourth attempt having said that. So far, it's a good breakout. We should sustain. As long as it sustains about 11,000, Anuj, I think it's going to 11,240. So it's a good breakout. Yesterday, we had a target of 11,084 and that is achieved. That is the cause for concern because we are just short of 10 points. Because the Bank Nifty, when I look at the Bank Nifty chart, we saw an up move, but the momentum was lacking. Target on that was 27,503. That did not get achieved. It was just purely the Nifty that got achieved. So there's a good chance Bank Nifty can go to 27,503. And if it stays above that, possible 27,600 also is a possibility. So I would say that so far still looks good to me. And if we get dips, since it's stretched a lot, the dips would be a buying opportunity.
Okay. That's a positive bullish call. Mitesh, good morning to you. See, at the moment, the SGX Nifty is showing 11,074, which means the spot is likely to open, a little lower than that, which means we are maintaining that stance over 11,000. So, bullish call?
Good morning, Lata. I would very much say so. See, I think Prakash was highlighting a very important point that yesterday we actually broke out of a 320-point range. If you take 10,660, 10,975 as your range targets with a gap. So the range width suggests that 300 points could happen on the upside. Gives you target in excess of 11,251. Happening with the gap does suggest that there are higher chances of it achieving the target. So in that sense, the bullish stance should be maintained. The gap filling becomes your stop loss, which is of course deep because we have had a good rally yesterday. But a 30-40 point kind of a pullback would be early morning, a good buying opportunity. I would definitely want to buy that. Keeping a stop below 10,975. Look for a slightly positional target in excess of 11,250.
Okay, well, Prakash, since you believe that it was a beautiful rally that we saw yesterday, what are the stocks that could take it even higher? I mean, we did see a lot of delivery-based buying, in names like ICICI Bank, Reliance Industries, Tech Mahindra. Any of the large caps that you would still be backing this morning?
Yes, good morning, Sonia. I'll start with Bajaj Finance. It's seen a good up move. The way it's traded, kind of given a breakout. I have a feeling it can climb to around 3,000 zones, but I would have, for the technical targets for today, perhaps I would have 2,750, 2,800. Would have a stop below 2,650 on Bajaj Finance, and I think it'll go long with this. Grasim is another stock. I think I'm told that the results today. It's a stock that has actually bottomed out, seen a very massive down move from 850 to 700. This is a setup that I normally look for, where we feel that it's more of a bottoming out process, and I think it can climb to around 775 zones. Stop should be below 716. I have Hindalco as well, looks good, kind of a base formation here, targets on the upside, maybe around 220, 225 zones the days to come, stop below 207. And finally, just solitary State Bank of India. I was hesitating to take banks, but I have taken it. Perhaps target would be 295, 300 zones, stop below 285. Looks good to me, State Bank of India, the best bank among the PSUs.
Yeah, SBI was interesting. The only problem is it's policy day, so perhaps, just want to be a bit cautious on that. Just a word on Lupin and Cipla, Prakash, since we were discussing that in closing bell yesterday, the big moves happening on the stock. Any chart check on that?
The last bar was very good. The way that bar is suggested that we could see a follow-up up move, and the follow-up up move could perhaps in Lupin could take it to around 870 zones. I would have a stop below 830 and trade long on Lupin. As far as Cipla is concerned, I think Cipla is also looking good. Seems to be a better one. So I would say it's given a breakout at 525. Just have a stop just below that, 520 so. And I have a feeling it can climb to around 575, 600. Seems to be a better bet out here.
Okay. Mitesh, what would you bet on? And do you have finance stocks considering it's ahead of policy?
Yeah, we had two buy calls yesterday on the banking side. Today I have more of other stocks, I would say the side action where I think this action, the side stocks where the action could spread. CESC had a very strong price and volume breakout. That's a buy with a stop at 716 for a first target of 755. Cipla, I think somebody just highlighted, I think that's had another price and volume breakout on the upside. So buy with a stop at 527. Look for target of 548. I also have a buy on Hindalco, wherein after a long time the intraday charts have turned positive. So keep a very tight stop at 207. Look for a mild rally to about 219 levels. And PNB Housing is another buy call. Just a buy with a stop at 918 for targets of 995.
Would you look at any of the large cap auto names, for a slightly longer term trade, Mitesh?
I would. In fact, I do like Bajaj Auto, Hero Motors, as well as Maruti to a certain extent. But the two-wheeler, I think, pack looks slightly better placed in terms of indicator strength. So Hero Motor, I think, is heading towards 3,000 plus levels. I would be a buyer with a stop below 2835. Similarly, Bajaj Auto would also make it about 2930, 2950 zones could be tested over there.
Okay. Yesterday's stock of the day was Tech Mahindra, up about 8%. Fresh all-time high on that. Prakash, any thoughts, or you think the move is done now?
No, it's certainly looking good to me. What a momentum pull it is. Only thing is, it is looking a bit stretched. It can go up to around maybe 825 zones or so and have a tight stop below 804. A deeper stop of 795 would be better off. But so far, looks good to me. Only thing is, it needs to give it the most time and space for it. It might see some sideways action, but yes, it is up.
All right. Let's tell you what to expect from the RBI policy this time. Today will mark Governor Shaktikanta Das's first policy announcement after he took charge in December. Hitendra Dave, the head of global banking and markets of HSBC India, joins us now ahead of that. Hitendra, hi, good morning. What is the money market pricing in? I mean, are we looking at no rate cut and perhaps a change in stance, or is there anything else that the market is looking forward to?
Yeah, hi, morning. I think it's clearly, clearly a policy which is coming on the back of. I think the December one was one where there was a lot of debate whether they would change their stand. Hello.
Yeah, we can hear you. Go ahead, Hitendra.
Okay. Yeah, what I was saying was that I mean, this is a fairly rapid change in monetary policy conditions, or at least the challenges before the MPC from the time in October, where I guess the debate was not whether they would hike, but by how much, and the question was whether they would go for 50 or not. And from then to October, where the debate was whether they would undertake a stance reversal from calibrated tightening to maybe neutral, to where we are today, where clearly I think there is data which suggests that they have every reason to cut if they want to, or should they wish to be a bit more patient and look for a bit more data to make a determined call on rate cuts. My own guess is, I think if you look at the minutes of the December meeting, I think most of the members were seeing that inflation has softened, largely because of food, had seen the impact of the oil price fall and all those things. But I think most of the members felt that it was too soon to even consider a stance change. Given that we've had 3 more months of data, given that Feb also appears to be relatively moderate on the food price front, and oil appears to have stabilized around 60, currency seems to have stabilized. There is a lot of talk about what the US Federal Reserve is seeing, which is making them indicate a long pause. We've spoken about ECB possibly once again looking at challenging growth conditions, China slowdown. So yeah, I think the conditions are absolutely ripe. Then it'll just be a question of which way the MPC wants to lean, wait for more data, or bite the bullet right now. I think that's where I would summarize the situation.
Okay, now before I come to how the market will react, Hitendra, what else would you watch out for? Okay, there is a pause or there is a cut when you first see the policy, but there is going to be a longer than the Urjit Patel press conference. There's a 45-minute press conference as well in the statement. It's a new man. So will there be new themes that you might expect?
Yeah. Well, I think without getting into the debates of the individual, obviously that's not appropriate for me to comment on. I think what I would watch for is, there have been developments in credit markets, and there is a certain section of the market which is effectively no longer able to access funding markets at all, or the cost of accessing that funding is quite high. There are second order effects of that freeze, which we are seeing in certain asset classes and certain markets. So I think whether there is any discussion around that, it's not an MPC issue, but at a Reserve Bank of India level, it's definitely an issue. I think, and whether that has any impact on their thinking vis-a-vis liquidity. And I think that would be one part I would certainly look out for.
No,
I think the other is again in the commentary, either in the formal comment. Sorry.
No, my point was that I'm not referring to Urjit Patel as a person and Das as a person. What I'm saying is, when Rajan was there, we had this debate on real interest rate. That vanished in the last 2 years when Patel was there. Also, how long a period should one look for in terms of projections of inflation? Because 1 year down the line and 3/4 down the line, the projections have not always been accurate. So, can these kinds of nuances change? Because now there is a fresh look at it. There is a new person.
Yeah. Sure. So I think if that's the question, I would say, from my side, I would think the following issues really need to be debated. I think the use, for example, of the weighted average call rate as a measure of liquidity. I think if you talk to most people who are part of the financial market, I think most of us will tell you that it's a very limited way of judging whether liquidity conditions are sufficient or deficient. The other, I think, is this whole emphasis laid on forward-looking surveys of the Reserve Bank of India. Again, it's tended to mislead rather than lead properly, and then we look for details. At least directionally it's headed down or up. But if we went by that, then we would have very different policy conditions altogether. That would be the second idea. I think the third, very clearly, is somebody needs to invest significantly more in understanding India's inflation dynamics. We just cannot misread so much. And for this, I have to say that it's not only the MPC or the RBI which got the inflation projections wrong. I think if you look at inflation projections by almost every analyst or macro economist in the country, I don't think anybody was projecting, let's say, 2017 and 18 average inflation to be 3.75% or whatever 3.75% or so. So I think there are things to work on, and clearly, to the extent that you have a new governor, and he might bring new emphasis on these aspects.
Okay, I just wanted your thoughts on what your expectation is with respect to inflation, because although CPI is moving towards the RBI's target, core inflation continues to be quite high, right, between 5 and 6%. How will that feature in the scheme of things today, and what's your own expectation?
No, I think the fact that you have a split inflation, where 50% is way below 4% and 50% is way above 4% is the real reason why we are debating whether there should be a cut or not. Otherwise, if you just go by food inflation, rates need to be cut dramatically. And if you go by core, then potentially you have to consider a rate hike imminently. So, and I think the governor is in his only public comments after taking over has alluded to this aspect. I think so. Therefore, the wider debate for all of us to decide is whether core will pull the headline inflation towards it, or the headline will pull the core towards it. Based on all leading indicators right now, I think there seems to be no correlation between the two. So you could have this divergence persist for a lot longer. I think food inflation appears to be on the back of a supply side response, and the supply side, if food production has gone up as various reports suggest, and incomes on the other hand in the rural areas haven't, you could have a fairly long period of unusually and almost unwelcome low food prices. And therefore, should the Monetary Policy Authority keep saying it's only 2 months or 3 months or 6 months? I mean, we've had 2 years of food inflation being sub 2% or so. So how long do you wait before you see that it's actually indicating weakness in demand as well? And therefore, interest rates need to reflect that aspect.
Okay, Hitendra, finally,
on the core side or the core inflation
sorry, go
side,
ahead.
Yeah, go ahead. I was saying on the core inflation side, again, since you asked me what are the areas, I think, you might look for a fresh, things like education, healthcare, which is really pulling up overall inflation, really have to see what impact monetary policy will have on demand for goods and services in that area. Because it's reflecting the demographic dividend, it's reflecting the urbanization effect, it's reflecting everybody wanting to take care of themselves a little better and educate their kids a little better. So I think this whole subject of how to read individual components, I hope is given a greater thrust and emphasis by the new MPC.
Okay, finally, Hitendra, what will be the impact? If there is a cut, what's the impact on bonds, rupee and stocks? If there is a pause, similarly.
No, I think, see, if it's a one and done kind of a cut statement, then frankly, it's a non-event. Okay, then I think we shouldn't really be debating. I think the debate is, are real rates in India, whichever way defined, and again, that would be one more subject, I think, as you mentioned, does need a further debate. What exactly is the real rate? Is it MCLR minus policy rate? Is it MCLR minus inflation? Or is it, 2-year, 1-year T-bill, etc.? So So I think if it's one and done kind of a statement, then it's a non-issue. I'm sure the market has priced in 50% of it, another few basis points, another movement a little bit on the exchange rate, a little bit on the equity market. 25 basis points is not something which will move the needle on growth or inflation. If it's an indication that, listen, the central bank is looking at inflation and its dynamics in a more wholesome way, like we just sort of some of the points we just discussed, and therefore we are looking at maybe a structurally lower rate cycle, then I think you will have a meaningful impact across all asset classes.
But if 5 members are the same as they were last time, do you really think that so much will change in the tone?
Yeah. See, again, I think if you read the minutes, I mean, I have read the minutes ahead of this particular interview. I think a lot of the members actually were just wanting to wait for more data. They just wanted to be wait and watch mode. So, they've waited and watched in December. They've seen 2-3 months of more data. They can feel the inflation of February as well. So I think to the extent that they were borderline people, I think the data would have given them cause to reassess. To the extent that some of the incoming growth indicators are not particularly flashing green, I think that's one more reason to consider. My own sense is, I mean, I don't know. We will see for certain that I think there should be a consensus around the decision that has to be taken rather than a split vote. My guess is everybody will come around or will be persuaded to come around.
All right, then if it is unanimous or if it is even a 5-1 in favor of Fakat, then of course we are looking at probably a very different reaction from the markets maybe. Hitendra Dave, it's always a pleasure speaking with you, and we'll try and touch base with you after we get the MPC's vote. But yeah, 2 members from the Reserve Bank itself last time around were, for a pause. And now if all 5 of them have to be converted into... Dholakia has always been dovish.
Yeah.
So that means converting 4 other people. If all of them, it can be a consensus, then clearly the market will take a very bullish...
Absolutely. Yeah, it may take time for that to happen, but as he mentioned, despite oil prices falling, demand continues to suffer. So in that context, whether they actually come out with a rate... I mean, it eventually doesn't help demand that much, but just perhaps a feel good.